Asian stocks were mixed on Monday while oil prices rallied strongly following drone attacks over the weekend that hit major oil production facilities in Saudi Arabia. The Chinese Shanghai Composite was little change at around 3,030.75. Hong Kong's Hang Seng Index showed about 1%. Australia's S&P ASX 200 closed marginally higher at 6,673.50. South Korean Kospi rose 0.64% to end its trading day at 2,062.22. Overall, the MSCI Asia ex-Japan Index traded 0.32% lower. Japanese markets were closed for a holiday. On the data front, China's industrial production growth saw its slowest pace in 17.5 years in August, rising just 4.4% year-on-year versus the plus 5.2% expected. Retail sales in China rose 7.5% in August from a year earlier, down from the 7.6% gain in July and below expectations of a 7.9% rise. Meanwhile, European stocks closed lower on Monday as investors digested an escalation of tensions in the Middle East following an attack on Saudi oil production. The Pan-European Stock 600 closed about 0.4% lower. The German DAX weakened 0.65% to 12,387.81. The French CAC 40 fell 0.78% to 5,611.15. And the UK FTSE 100 fell 0.36% to 7,341.03. As for individual stocks, the picture was mixed due to a rally in oil prices. Majors like BP and Royal Dutch Shell surged, while airlines including Air France-KLM that are sensitive to jet fuel costs tumbled. U.S. stocks declined as well on Monday. The Dow Jones Industrial Average fell 0.5% to break a streak of 8 consecutive gains. The S&P 500 had its biggest decline in 2 weeks, with American Airlines being the biggest loser in the index. The S&P 500 fell 9.43 points, or 0.3%, to 2,997.96. The Nasdaq lost 0.3% to 8,153.54. Oil prices surged after drone attacks over the weekend hit major oil production facilities in Saudi Arabia, wiping out 5% of the global supply. Two sources briefed on Aramco's operations said a full return to normal productions may take months. President Donald Trump said the U.S. is locked and loaded and waiting to hear from Saudi Arabia as to the next steps. He also authorized the release of U.S. oil reserves to help maintain global supply. A gauge of oil market volatility on Monday rose to the highest level since December of last year. Oil ended nearly 15% higher, with Brent logging its biggest jump in over 30 years at a record trading volumes. Prices hit on highest intraday percentage gain on record and finished at around $68. In currencies, the greenback rallied against major counterparts as the US dollar closed at 1.10. The euro lost ground amid risk aversion. Late last week, the pair failed to break above the 1.11 local resistance and started to retreat. Apart from rising tensions in the Middle East, the sentiment surrounding the euro was negatively affected by the fact that the World Trade Organization ruled in favor of the U.S. in case of illegal subsidies granted to European aerospace Airbus. So Washington may now impose punitive tariffs to EU products for as much as $21 billion. Today in Asia, stocks were mixed as geopolitical tensions surrounding Saudi Arabia kept investors alert, with markets ignoring the reports that a Chinese diplomat will travel to the U.S. for initial trade talks during this week. On the data front, China's new home prices grew at their weakest pace in nearly a year in August. Average new home prices in China's 70 major cities rose 8.8% in August from a year earlier, compared with a 9.7% gain in July. That is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.